Hi guys, hope you guys are doing good and well. We're still here in Iceland to make videos about saving and investing and more of the basics of the stock market. So, what do I want to discuss for all of you today? I've got a lot of questions about ETFs and about the validity of it. How good is it? Is it actually worth your time for investing? Should you actually put money into it? So this video is all about ETFs and how if it's a viable investment for the long term. So first of all, what's an ETF? An ETF basically is like a fund where it tracks a certain type of asset. So it can actually be not just stocks, it can also be gold. It can also be other markets where it's a set basket. The key word is it's relatively passive and it just tracks and follows that particular type of investment that it's following. So for example, if you have an ETF that tracks gold, like the Spider Gold ETF, the underlying asset is gold, and when you buy that ETF, whatever the performance of the gold will, that's how the Spider ETF will also function. So if you are wanting to have a greater degree of diversification, I think an ETF will allow you also to spread your assets, not just in Philippine stocks, but it will allow you to buy like the S&P 500, it will allow you to buy China stocks, it will allow you to buy tech stocks, and it will give you the diversity, but not just the diversity of investments, but it will give you the option also to get different returns from different markets as well. Now, for those that are asking about the ETF here in the Philippines, we only have one ETF. It's called the FMETF. It's an index. It's an ETF that tracks the Philippine Stock Exchange Index. So what it does is this: whatever the composition is of the PSEi, it just follows it to the very letter. What's nice about that though is indices outperform active funds over the long term. Here's a secret, but it's not a secret. Everyone knows about this. Warren Buffett placed his will that his kids, should he pass away, the money would be placed in ETFs. Why? It's a good and passive way for you to invest in the market, to get exposure in the market, and still earn. Studies have shown that if you invest in ETFs, it would actually beat other equity funds, other mutual funds, other funds where it's actively managed. And if you also read my book, I placed there in Winning Strategies for Investing that number one, indices, since it's the PSEi, it's recalibrated every 6 months, meaning there will be certain stocks there that will be out of the list, and there will be certain stocks that will be placed in. So what's nice about that is this: there will never be a time, if you're holding the FMETF, there will never be a time if you're investing in the index that the index will be closed down. There will never be a time also that you are holding a stock that's bankrupt. You have to remember this: the stock market. In a stock market, if you buy the wrong stock, even if you hold it for the long term, even if you hold it for a long time, it won't do you any good. So why am I saying this? If you invest in the ETF, if you invest in an index fund, you remove the risk of buying a company that's closing down, because there will never be a closed company inside the PSEi. So that's one of the risks that you start to avoid. Second is the fees are relatively lower. So instead of going for something that's actively managed and you have something that gives you a higher amount of fee, why not invest in something that gives you lower fees and has a proven track record of earning over the long term? And that's your advantage there. It's not just it has low fees, but I wrote in my book Winning Strategies for Investing that number one, indices go down, similar to any stock, any market, but the advantage that they have over that is that when they bounce up, when they go up, they always go higher than where they were before. And that's what's nice about it. Even if you time the market wrongly, it's okay. Why? Because if you're a long-term investor, you're a passive investor, ETFs will do the trick to make your money work hard for you, because they will always go up. They may retrace down, they may bounce down, they may go down, but they will always go up higher than where they were before. So if you have no time to invest in stocks, you don't have the time to research, I encourage you, ETFs are the way to go. I encourage you, ETFs are one of the best ways for you to be exposed on the largest companies, not just in the Philippine Stock Exchange Index. So that's it. So if you're asking me whether I have ETFs, whether I am a big fan of it, I love it. But of course, I have a separate portfolio where I do all of my trading. But if you're a person who wants to have passive returns on their money and you don't want to analyze stocks using technical analysis, you just want to be very passive with it, ETFs are the way to go. The thing now lang, no, if you want to use valuation patterns in it, valuation techniques, you can use the PE ratios to determine if the index is relatively expensive. If it's expensive, it allows you to, hey, wait a minute, just time it a bit, and also wait until it becomes relatively cheaper. But other than that, even if you don't use valuation ratios, ETFs should do the trick because it's a long-term investment. So number one, if you're a long-term investor, ETFs will do the trick for you. Number two, if you want to maximize growth, because you have to understand, most of the stocks that are in the PSEi are companies exposed to what's happening in the economy. So if you want to have something that takes advantage of the general economy, ETFs are something for you to look into. If you're a parent and you want your kids to have exposures to investments already when they're very young, you can invest in ETFs for them, and then when they hit 21, when they hit their 20s, they will have enough and sufficient money also that since they started early, it would have grown. So ETFs go down, but they always go back higher than they were before, and you remove the risk of buying a stock that will close down, because that's one of the amazing rules about ETFs. The companies that are there will always be active in the market, and they're recalibrated every 6 months. So that's it for now. I hope this helps you. I hope this gives you an insight on how you're supposed to go about your investments, especially for those who want to buy more ETFs or those who want to be passive investors. This is Marvin Germo from Iceland. I hope this helps you trade well, trade strong, trade smart. See you all again soon.